Hi guys, and welcome to my YouTube channel. My name is Ratnda Rasiweda, and in this channel we talk about all things personal finance, understanding all the financial investment vehicles that are out there, making sure that we rightfully use them towards our goals and ultimately achieve that financial freedom. Woohoo! So today I'm celebrating maximizing my tax-free savings account for 2025. I am excited about that. I have just smashed one of my biggest 2025 goals, and I hope through this you're also encouraged to push on and keep on keeping on to go for your 2025 goals. Okay, so let's talk about tax-free savings account a little bit before we can get into the topic of the day, which you may have seen from the topic of the video. So I want to talk about the 4 ETFs that I bought when I maximized my tax-free savings account. I have deposited 36,000 lump sum and maximized my tax-free savings account and bought 4 ETFs, which I'm going to speak to you about. But like I said, before we get there, let's talk about tax-free savings account. Okay, so a tax-free savings account, I'm not going to give too much details because I have a video specifically for tax-free savings account with detailed information on what it is. So I'm just going to give a little bit of brief and my reasoning of being so obsessed with this product, right? So a tax-free savings account, it is an investment account that allows you to do your investments without getting taxed. I'm sure we can all agree that we pay way too much tax than we would want to. Like, you buy food, you are taxed, you do this, you try to do business, you're taxed, you try to invest through other products, you're taxed. So the benefit of this product, tax-free savings account, is that you can do your investing and all the returns are all yours. SARS doesn't get a single bit, right? So the best way of being able to maximize your money is allowing it to grow without it being taxed. So I love that about a tax-free savings account, and is one of the reasons why I'm investing so much in it, right? So your dividends that you could make on tax-free savings account, your capital gains, and your interest does not get taxed. Okay, so for some of you who like some numbers, I want to give you the number version of why I'm actually doing this, and I will put the screenshots, I will attach the screenshots just so you guys can follow. Okay, so I've already done the assessment on my notebook. Okay, so tax-free savings account allows you to deposit 36,000 rand per year. So you can either put 3,000 rand per month, so that in 12 months you have deposited 36,000, and the starting date of a tax year, it's every first day of March, right? So you can start your first 3,000 rand in March until February of the following year. That's how the tax year is. It's not January to December, right? So you can put up 3,000 rand, or if you have a lump sum, you can put lump sum whenever you have it. So it doesn't have to be structured the way you deposited. You can also deposit as and when you have the money. Okay, so for me, I played a stock file, and the reason I played a stock file is because I wanted to account to the money that I'm making through social media. I realized that, okay, I'm making a little bit of a tangible money month on month on social media, or on my side hustle rather. Side hustle meaning that everything pertaining my social and personal finance business. So then to account to that money, just so I don't like just waste it and spend thinking that I have a lot of money, I decided to join the stock file, 10,000 stock file. I think it's 6 of us, meaning that you get 50,000 per person. So I got my money in February, and the best way I could figure out what to do with that money was to maximize my tax-free savings account. So I took 36,000 rand of the 50,000 and deposited it in my tax-free savings account, and I felt so good knowing that my personal finance business is able to sponsor my tax-free savings account. And this is to say, every month I should be able to make at least 10,000 rand through this business, just so I can be able to pay back other people the money that they've already paid me through the stock file. Okay, and also to challenge myself to say, if I think this is a business, at least the amount I would wish it could make is this 10,000 rand per month. Okay, so yeah, I'm sorry about that. That's a long intro, but let's go to a numbers game in regards to the tax-free savings account itself, and then we're going to talk about the ETFs that I bought. So you can deposit 36,000 rand per annum and 500,000 in a lifetime, right? So for me, this is my 5th year of contributing to my tax-free savings account. It's my 5th year of maximizing it. So I'm left with 9 years to be able to complete the maximum you can contribute to reach the 500,000, right? So on my 14th year, because you need about 13.8 years to be able to maximize it, and I'm on my 5th year, so I need 9 more, right? So when I maximize it, I would be sitting at 500,000, of course, which is the maximum. And the interest I would have gained, and this is calculated on 11% based on the current performance on the entire tax-free savings account that I have annualized year on year. Performance that I currently have today is 11%, and hence I'm using 11% to do these numbers. I think it will improve considering that I am selling so that I'm not overly spread, so I can maximize on the growth when there's growth on my portfolio. So I'm using 11% because that's the reality of the day to day. Okay, so on the 14th year, I would have 500,000 of my contribution coming from the 36,000 that I would have deposited throughout the 14 years, and the interest based on the year on year of 11% would be 698,000, and in total the 698 plus the 500,000 would give me 1.2 million. This would be in the next 9 years when I maximize my tax-free savings account. At that time I will be 40. Okay, so then I thought to myself, it's not like I want to withdraw it right away as 1.2, so I will give it 5 more years to grow. So I will still not be depositing any money because I would have maximized my tax-free savings account, but I will allow it to grow 5 more years without me withdrawing a cent, just allowing it to give me that compound effect. Okay, so for the 5 more years, keeping it that 1.2 that I have for the next 5 years. After I've turned 40 in the next 9 years, I will be turning 40, and I will keep it for the next 5 years. And still I will calculate this based on the 11% because it's the reality of today. So the interest that I would gain in the next 5 years would be 823,000 rand, and the total that I would have when I turn 45, yes, when I turn 45, because I would have kept it for 5 next years after maximizing it, it will be 2 million rand, right? So in the year 46, this is the year that I plan to start withdrawing from my tax-free savings account, because you have to have a strategy on why you are investing, right? So for me, it's about building a passive income, money that will be coming to me without my capital reducing or without my money reducing through tax. So I would have a lump sum of 2,000 rand in this account, and the year 46, when I turn 46, would be the year that I start withdrawing, and using 11% on the year 46, or on my 46th birthday, I would be having 222,000 rand, right? And I will withdraw the growth, the interest, which is then I will be having 2,222,000, and I will withdraw all the interest that I would have gained over that year, which is calculated on 11%, and it is 222, and divided by 12, then that would be 18,000 per month. So this is a passive income that I plan to get from my 46th birthday onward. I'll be withdrawing 18,000 rand through and through, and my capital will remain the same. And of course, depending on the growth of that particular year, therefore, I would have different amounts, but I'm comfortable with having or setting it up at 18,000 for now. So this is the strategy I have on my tax-free savings account. I know this reason is a little bit long on why I'm even like trying to make sure that I maximize it all the time so that I can have that from my 46th birthday, and then I can have that passive income that people are always talking about without my capital value reducing. Okay, so then let's talk about the ETFs that I bought. I think if you've watched my other of my previous videos, you would have seen that I'm trying by all means to reduce the number of ETFs that I have. You do not need 13. Currently I have 13. I think I've sold one, and I'll talk about which ones I sold. And I think I've been giving you guys a hint. You guys don't want me to sell Resi 10 because it's doing well. Yeah, but we'll talk about the ones that I've sold. But I just bought the ones that I already had, and I only bought 4 because, like I said, you don't need 13. So I want to try to maximize on strategic ETFs that I know that in a long run this would be the industries, the ETFs, the coverage that is giving me good exposure. It helps me mitigate the risk at the same time maximizing my growth. Okay, so I'm focusing on only 4. So we will talk about the name of the ETF, the objective of the ETF, today's price of that ETF, the performance over the last year, the last 3 years, the last 5 years, the last 10 years, and also year to date, like how is it doing year to date in 2025, right? And the total expense ratio, as we know, total expense ratio eats away the growth that we have on our performance. So therefore, the lower the total expense ratio, the better the growth we can have for ourselves. And I will also talk about whether this ETF pays dividends or not. And yeah, that would be it. So let's get into the details of those ETFs. I'll be looking at them from my phone. So excuse me if you see me looking down, it's because I am looking at my phone. Okay, so the first ETF that we'll talk about is the 10x Total World, right? The price of that ETF today is the what? It's the 24th of March 2025. So the price of that ETF today is 15.67, and the total expense ratio is 0.29. I'm comfortable with that. Anything 0.5 and less than 1 is fine, right? So it's 0.25, which is fine. I want to check if it pays dividends or not. Yes, it does. It normally pays in March and in September, so I should be expecting some dividends in March. I haven't seen it yet, so that means it's still coming. And I said, okay, we're going to talk about industries. It has 23% of information technology. There's also financials. There's also consumer discretionary, industrials, healthcare, communication services, consumer staples, materials, energy, real estate, and utilities. I love how evenly spread it is. It's not like heavily spread into one industry. It's spread in different industries, and more or less equivalently, not necessarily leaning more towards one industry, right? And in terms of countries, because this ETF is a total world ETF, in terms of countries or geographical exposure, it's giving us majority of the companies from this ETF comes from the US, and of course American stock market is bigger than the rest of the world, so it makes sense. 63% of these companies comes from the US, and then there's 5% from Japan, United Kingdom being 3.2, Canada 2.7, China big 2.6, and Switzerland, India, Taiwan, and others, right? So not bad. I would have preferred the US to be less than 50, but that's fine, right? And when it comes to the performances in the past, and I'm going to talk about the objective just now, just want to talk about. So in the last year, it gave us 19.8. That's sweet. And then in the last 3 years, annualized performance of 14.2, which is also good. This ETF is not older than 5 years. So since it was started, since inception, it has been giving an average performance of 15.3, which is very comfortable. So I'm good with this ETF and what it is doing so far. So in terms of the objective of the ETF says that the 10x Total World Stock Feeder Exchange traded fund is a feeder, and it seeks to track the FTSE Global All Cap Index, which covers both well-established and still developing markets. I love that. The investment objective is to provide income to investors and capital growth over a long term, right? To achieve its investment objective, the fund will, apart from assets in liquid form, consist solely of participatory interest in Vanguard Total World Stock ETF. Okay, so ultimately that is the objective of the ETF. I think one of the things that I love here is that it's focusing on well established and still developing markets. The mixture of that is actually good because it allows you to get the growth from developing markets, but also you also get dividends from well developed companies or well developed markets. Okay, so that is the ETF, the first one. The second one is I don't know what I'm forgetting. Oh, we are forgetting like year to date how it is doing. Let me try to see if I can get that. Year to date in March, how is this ETF doing before we can get to the second one? And that's what I'm going to start with for the second one. Okay. Where is year to date? We don't have year to date. Okay, I'm just gonna say 3 months. In the last 3 months, it is at minus 1.69%. There was a drop. For me, that means that it was a good time to buy because it's on the low. But to be honest, I don't normally check where the ETF is before I buy. I actually just buy whenever I have the amount just to maximize on cost. I think it's called cost averaging. You guys can tell me the right terminology for this concept, where you say some stocks you're gonna buy them at low, or sometimes you're gonna buy at a low, sometimes you're gonna buy at a high. Overall, the overall price would be averaged out, right? So that's why I don't necessarily like check where the stock is before I buy. But I guess that was just good for me because now it is not performing so well, which means that the price is lesser, right? The second one is one of my favorite. It's One Invest S&P 500 Information Technology. So the information technology, the S&P 500, this is the S&P 500 that focuses on information technology, right? So it's not the original S&P, right? So this one focuses on 35% cap, meaning that no single stock can have a weighted of more than 35% on this ETF, right? And it also says that the sum of all the stocks with the weighted of 4.8 cannot exceed a total of 20%. So this is just to minimize the dominance that can be that can happen with big stocks like your Apple and your Microsoft. So just to be able to have more exposure in other companies outside of the big companies, so they kept their exposure to 35%. Less than 35% of weighted average on individual stocks, and collectively all these stocks that has high weighting should not exceed, which is more than 4.8, should not exceed a total of 20%. I love that balance. But this is the S&P 500 that focuses only on information technology, and it is provided by One Invest, right? Okay, so now we can go and talk about where is it? Here it is. I've already just elaborated on the objective. I want to see if it pays dividends or not. It doesn't pay dividends, which is fine. And I want to go to the performance now. The performance over the last year, the performance was, guys, 15.57. I love this. And then in the last 2 years, the annualized performance of 38.46. And in the last 3 years, it was 26.52. In the last 5 years, it was 28.49. And since it has been launched, it is 29.59. This is really, really good. This is one of my favorite, by the way. And then what else did I want to give you about this ETF? I think that would be it. And you can just go and look into the fact sheet of this ETF from Google. You can check One Invest S&P 500 Information Technology Fact Sheet, and you can read more about it. And the price today is selling at 28.15 cents, so 28 rand per ETF. It's a little bit affordable. And also in the last 3 months, it has also dropped. It is at minus 12.43%, meaning that, again, I bought it at the right time because it's at its low, right? And based on the previous performances, I am not even shaken about this low in the last 3 months. Okay, so let's go to number 3. Number 3 is Nasdaq 100, also another one of my favorite. It makes sense why I bought them, because I bought my faves. So Nasdaq 100, let's start with the price and the year to date. Okay, so Nasdaq 100 is selling at 210 today, 209 today per ETF. And in the last 3 months, its performance has been minus 8%. And then let's go to the previous performances of this ETF. So in the last year, it performed 26.05, guys. ETFs. And then in the last 3 years, 20.51. In the last 5 years, 24.53. Since inception, 26.64. This is one of the ETFs that has sustained over 20% year-on-year performance, like annualized performance, is since it has been started. Stellar performance, impressive, right? And the industries in which it focuses on: information technology, again, it's the majority, just a little bit below 50%, but others are communication, consumer discretion, and energy, etc. Although they are low in terms of their weighted average, they also have exposure to these other industries. And in terms of total expense ratio, I believe it is 0.48. It's a little bit expensive, but as long as it's less than 0.5 and 1, then I'm still comfortable with that. And in terms of dividends, it does pay dividends quarterly, which is good. And what else? I think that is fine. Okay, maybe I'm just gonna read the objective for you guys to have an understanding of what it is about. I'm not gonna read everything. Again, if you guys are interested in looking into the fact sheet of this ETF, just go and type Cetrix Nasdaq 100 fact sheet and you will get the latest. Okay, so it says the mandate of this Cetrix Nasdaq 100 ETF is to track as closely as possible the price performance of the Nasdaq index. Straightforward, it tracks the Nasdaq 100, just trying to make sure that it performs similarly to the index. Okay, so lastly, I don't know if you guys will be surprised on this one, or you will just say, I see. I chose to buy the 4th ETF to be Cetrix Fin 15. All right, that's the one. Okay, so let me tell you more about it. So in terms of total expense ratio, it is 0.43. And in terms of dividends, it is distribution, it pays quarterly. And in terms of performances, last year the performance was 20.96. In the last 3 years it was 14.7. In the last 5 years it's been 10.9, and in the last 10 years it's been 6.54. I have a feeling that they are figuring out how to manage this ETF, right? There is a lot of banks and insurance companies in this ETF. I have a feeling that we still have a lot of learning and a lot of growth to do when it comes to financial industry. So for me, instead of buying individual banks, I think I'm gonna hold this ETF to see where the financial industries will go, right? Although there's not a lot of innovation when it comes to the financial industry and insurance industry, it's boring, but I think fintech is becoming a thing, and hopefully there will be some breakthrough that can give growth to companies such as your Capitec, which is part of the Fin 15, and therefore I will benefit from that through my Fin 15 ETF. Okay, so in terms of long-term growth, so far not so good, but it's showing progressive growth because in the last 3 and 1 year it has been increasing. Okay, so that would be it, guys. Or maybe let me read the objective and give you the price as well today, how it's performing. The objective, it says the mandate of the Cetrix FINI ETF is to track as closely as possible the value of the FTSE JSE. Oh my god, someone just started cleaning. At least that was done, guys. Yes, it's just to like track the 15 companies in the JSE. Oh my god, sorry about that, guys. But I was done. I think the only thing that I wanted to do is just to give you the price of this ETF today, like how much it is today and how it has been performing. Let me just quickly close this before a person starts again to clean, because I need to. We don't have our own place. We live in complexes. Today is performing at minus 2.5%. It's been going up and down throughout the rest of the year so far. Doesn't give me comfort. I think when you're going down, just go down. When you're going up, just go up. And then the price today is 20.65 Rand. So you can check it out and decide if any of the ETFs that I spoke about today you would be interested in adding in your portfolio. Guys, bye bye, because we're cleaning walana by a hoovara. So if you watch until the end, give me a green heart, green for sustainability and long-term growth. Goodbye. Cheers.